So, we've been awaiting them for some time now, but at the end of last week, HITI released its Q4 results. As always in these videos, I don't just want to tell you what you've already read about or may have seen. I want to give you my take and perspective on what's going on, what this means, and most importantly, what's next. Now, you can't argue with these results at all. They're really positive in whatever light you look at them in. Every metric is basically really encouraging, and it's not often you can say that about companies. Revenue growth increased by 118% for the full year, and at the same time, international revenues have increased from $11 million to $80 million. This on its own would be great to see, and often comes at the expense of any cost control or management of the cost base, but this is not the case at all. Gross profit has increased by 108%, with gross profit margins still in the mid-30%, which even captures some of the impact from the discount model launch, and EBITDA remains positive for the 6th consecutive quarter. This is seriously impressive. As a reminder, we've always known and have been aware that the transition to the discount model would result in some decrease in EBITDA, at least for some period of time. And the effect here is almost like a hockey stick chart effect. Even some of the analysts were predicting negative EBITDA for the quarter, with a consensus of around $0.7 million. HITI way over-delivered here by generating $1.6 million of EBITDA for the period. Now, it's always so important to put results like this in the context of what the analysts were predicting, especially when the market, and the cannabis sector too, is in its current state. HITI not only beat the analyst estimates for Q4 by some margin, which in itself is impressive, but the company also beat the highest of the analyst forecasts. This is seriously impressive, especially when you look at other companies of a similar size to HITI and their track record, and that's not just in the cannabis sector. This in fact isn't the first time it's happened either. It's a consistent trend, and it should fill any investors with great confidence about the capability of Raj and his team and their commitment. Also, it's really important to point out that this has all been delivered in the context of a very tough broader cannabis market. It's not an easy market at all, and you just need to look at the performance of many of HITI's competitors to realise and fully appreciate that. Now, I want to share with you very quickly a piece of analysis I've done. So in this chart, what you're looking at here is the quarterly revenue progression for Fire and Flower, one of HITI's closest competitors. What they've achieved here is a pretty respectable growth on a revenue basis. Now, as you can see in this chart, I've overlaid HITI's quarterly revenue progression. Now this for me, as somebody who loves a chart, really helps bring the point home. It demonstrates the superior execution, stronger growth and better delivery of the strategy that HITI has versus one of its main competitors. Now, I'm not saying that investors should only own one of these stocks and not the other, as clearly diversification is good. Now, for full clarity, at this point in time I only do hold HITI, but the point here still stands that Fire and Flower has performed well in what is a really tough market, but HITI has massively outperformed them and now has overtaken Fire and Flower in terms of size measured by sales and is growing at a faster rate. Now, this hasn't happened overnight, and it's clearly the result of a lot of hard work, great deal doing and effective integration of those deals by Raj and his team. The ecosystem that HITI is building and has developed is really starting to pay off here and will help continue to drive that incremental greater growth. Whilst HITI is on track to be the third largest cannabis player in Canada by sales, if Raj does keep this up, which I have little doubt he will, then it won't be long before HITI is number 2 or even number 1. So, while what has happened so far is great, clearly what is to come is even more important. As part of that earnings report, Raj did provide some guidance for Q1 in 2022. Now, we know these results will be with us before too long, covering the period from November through to January. As part of these results, we also know that this will include a full quarter for Blessed CBD and around 2 months of financials for New Leaf. Now, the guidance we have is for revenues of around $70 million for the quarter. Now, on a run rate basis, that equates to around $280 million of sales, which is enormous. Around a 55% growth in sales on this year, which is enormously impressive in context of that challenging market dynamics we've discussed. Now, we also have a bunch more of exciting stuff coming from beyond this period of time too, from more international expansion, more product NPD, new product development, and what really excites me here, which I have some separate analysis which takes up a whole nother video in itself, is the tech potential and possibility here in the business. Now, in spite of these amazing results, the market sentiment is tough for cannabis at this moment, so don't expect any enormous movements in stock price for the company currently. Now, there's one final thing which I want to touch on as part of this video, which is something that a couple of people have asked me about, and that is the access to funding from ATB as a result of the covenants not being met. Now, I'm going to keep this as simple as possible, as it really is a non-event and nothing to worry about, but I'm keen to make sure this is something which everyone fully understands. It seems as though we're nearly done with all that dilution fear post that we've been dealing with for way too long, so let's nip this in the bud before any of the keyboard warriors take this one all out of proportion. So basically, when a company secures financing from a bank, whether that's committed or actually funded with cash into an account on day one, the borrower is subject to a set of tests or rules which are calculated periodically, usually quarterly but sometimes monthly, and those are called covenants. They basically exist to give the bank some security and ensure that the company is performing as expected and, as a result of that, able to continue borrowing or continue having the facility. Now, as everything with the company does, HITI was pretty ahead of the curve in securing such financing, and so the banks didn't really have any real precedents or examples to use for the facility. For context, growth companies typically have very limited covenants when they borrow, if any, but as a leader in the sector and without any precedent, HITI was just subject to more covenants than a growth company typically would be. Now, under any normal circumstances, this would be no problem at all, but clearly the recent transition to the discount model and HITI's quick reaction has meant that the financial projections and the forecast which the bank previously received and agreed the financing on are now slightly different, and so technically HITI is now partially in breach of this. Now, there were a couple of options here. HITI could have, instead of reacting quickly, sent the reforecast to the bank and waited for a couple of months and negotiated that through for it all to be approved, and then the covenants be changed and tweaked. Taking this approach would have wasted precious time in repositioning the company and would potentially have missed a massive part of the opportunity. As a result, they took the decision to go ahead with the strategy shift before renegotiating the covenants, and they're clearly in discussions with ATB now, who is their main banking partner, who they have other facilities with and bank accounts, so it's clearly somebody there's a good relationship with, and I'm sure that this will be sorted out in the coming weeks or months, and is more a technicality more than anything to be worried about. Banks typically aren't known for being super speedy, and personally, as an investor, I'm pleased HITI took this approach. It's clearly timed perfectly, generating great results so far, and once again, competitors are left in the dust and playing a bit of catch-up. Anyway, that's it for this video. Thanks for watching, I hope you enjoyed it. If you did, please smash the like button. If you're new to the channel, make sure you're subscribed, and check out the Patreon for the private Discord and a load of other investing stuff. As always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.